make your case for me as to why you want to be invested into big oil stocks right now.
Well, I think the practical matter is that there's always going to be demand for oil, and I think that when you have companies like a Chevron, which reported, by the way, a really good quarter today, this morning, you want to be with diversified companies, and their upstream business was good, their downstream business was good. They have appeared to be really good stewards of capital. And you mentioned just a minute ago that they reduced capital expenditures again. And many of the things that they've done, operating expenses coming down, is really pointed toward conserving capital to make sure that their dividend is safe. And I think that a lot of investors place that as a very high premium, and I think they're doing a very good job with that.
So do you then buy on dips, or are you just not selling?
We actually, that's a really good question. We are not selling right now. Certainly Chevron, if you're talking specifically about oil, we are not. What we're trying to do is to do what I think every prudent investor should be doing in this time, which is looking at how to upgrade their portfolio. And I would say, based on what we've seen today, and again, the Exxon results came out a little bit later, that our predisposition would be to be a bigger weight in Chevron than in Exxon. It's one of the reasons why we are overweight Chevron relative to Exxon in our funds. And I think they proved today that that's a smart thing. And, Exxon, let's look at Exxon. They have beat revenue 13 out of the last 20 quarters, and they beat EPS 11 out of the last 20 quarters. They have a very different philosophy than Chevron, and we think that Chevron's is much more durable.
So, and I also wonder how important dividends are to the stocks that you invest in for two reasons. One, because Exxon and Chevron, even if they're going to freeze their dividend like Exxon did, they're very committed to it. Apple increased their dividend at a time when many are suspending or cutting their dividend. How does that factor into your investment thesis?
The way we run our funds is that dividends are not as big a component. It's certainly a nice to have. But I think in this environment, you also need to be really careful. We've seen some of the international integrateds cut their dividends pretty significantly, and their stocks have really gotten hit pretty hard by that. And I think that Exxon and Chevron both have seen that, and they're very wary of that, which I think is one of the reasons why both companies came out and really are making a lot of noise about protecting their dividend. But for us specifically, we're not really growth and income managers, so it's not as big an issue for us as it might be for other managers.